So we start with the car giant Tesla. It's raised its spending plans to more than $25 billion as the boss Elon Musk plans to invest more in artificial intelligence, robotics and chips. He said these plans would build big revenue streams in the future and described them as well justified. But investors are not convinced, with Tesla shares initially up and then down in after-hours trade. Known for its electric vehicles, Tesla's current market valuation is just short of $1.5 trillion. Here's our North American technology correspondent, Lily Jamali.
Tesla is planning a pivot towards the areas of artificial intelligence, autonomous vehicles, and robots, but that pivot won't come cheap. And on Wednesday's earnings call, Elon Musk told investors that he plans a $25 billion investment in the year ahead. A big chunk of that money is going to go towards things like AI software and chips. And so Tesla joins a whole host of American tech companies that have vowed to spend big on AI. Musk telling investors that he thinks, quote, it's going to pay off in a very big way. The challenge for the company is that so far they haven't been able to monetize areas like robotaxis and robots. The question of whether Tesla can ring up big profits seems to be leaving a lot of investors uneasy. The Optimus robot isn't even available to the public at this point. Tesla has also lost ground in its core business of selling electric vehicles to China's BYD and some other players. Their sales are still reeling from Musk's foray into politics here in the United States and elsewhere. Back in November, Tesla shareholders did approve a record $1 trillion pay package for Musk, but he only gets the full package if he is able to meet certain benchmarks that were agreed upon in advance.
Lily Jamali there. Well, Joe McCabe is President and Chief Executive of Auto Forecast Solutions. I asked him what he made of Tesla's numbers.
One concern we always look at is a big part of their revenue was their carbon credits. And with the no penalties anymore in the United States, there's no more ban manufacturers that are really buying those credits. Now, they're still getting about $380 million this past quarter in credits, but that sort of is dwarfed. They were getting up to $600 million in past times. So we look at those revenue streams. Tesla's the only company that can survive on three models: the 3, the Y, and the Cybertruck. And the Cybertruck's losing favor because it sort of was a very polarizing product. Yes, there's other products coming. Yes, there's a Cybercab. We even have a Cybertruck SUV, and even, let's call it Roadster 2.0, going back to their grassroots of their first vehicle in the pipeline. But there's a lot of competition in this space. They really have a good foothold in North America still because we're not allowing the Chinese in here. But other markets like Europe and obviously Asia, there's a lot of headwinds in terms of competition they have to face. So the numbers are better than we expected. But honestly, from a production standpoint, it's their worst quarter. The second worst quarter they've had in the last 2 years. Again, decent volume.
When you say the second worst, sorry to interrupt you, Joe, was the first worst quarter this time last year? Because actually we've seen an increase in profits on a year ago. And this time last year, there was so much conversation about Elon Musk's role within the White House, his job within Trump's presidency in terms of bringing efficiency in the US, but also how vocal he was here in the UK with our politics in Germany and elsewhere. That was having a knock-on effect on Tesla demand.
It was a short-term effect. And yes, when you're doing a quarter over quarter from last 2025 Q1 to now, it is comparison better than them. But if you look at the bigger scale, the last 2 years, you're still talking about it's not at their high water mark. And this is where we're really starting to see cracks in in their structure.